Good morning. You're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our banner story. Money sent home by overseas Filipino workers surged by 12.7% in the month of April. That's the fastest remittance growth since November of 2016. Fresh data from the Bangko Sentral showed that remittances in April rose to over $2.3 billion. That's from more than $2.04 billion a year earlier. However, that April figure was lower than the economist's median estimate, which was 19.3%. The BSP expects remittances to grow by up to 4% for the full year 2021 after it fell by 0.8% in 2020 due to the downturn caused by the pandemic. The April print came from a low base in April of 2020 when remittances fell by 16.2% after thousands of OFWs lost their jobs amid the lockdowns abroad. Back on the home front, economic managers have pledged to ensure fiscal prudence to help revive the economy. Finance Chief Sonny Dominguez said the government will drive up economic activity by proceeding full speed with the infrastructure projects. The government has so far released more than 660 billion pesos to various agencies in the battle against COVID-19. That's according to the Budget Department. The DBM said public works and transportation projects are part of the pandemic response since these generate jobs. Meanwhile, NEDA Secretary Carl Chua expects the economy to have grown in the second quarter following the reopening of more businesses. Domestic GDP remained in a recession in the first quarter after it shrank by 4.2%. Now, the Trade Department is urging the public to be cautious of pyramid sales schemes circulating online, saying that as of the end of April, the agency received more than double the usual complaint about such schemes. Now, in a statement, the DTI said they received a total of 28 complaints in chain distribution plans or pyramid sales schemes from January to April this year, from just about 12 complaints last year. But aside from pyramid sales schemes, consumers are also getting targeted by fraudsters through spam messages and malware links disguised as something else. With more and more people working from home, a cybersecurity firm says spam messages multiplied by 220 times between February and March of last year, while malicious links almost quadrupled. Now, to add, the BSP says about 13% of the 20,000 consumer concerns they received last year were related to fraudulent, unauthorized cash and card transactions. As criminals adapt to the pandemic by also going digital, victims across the world have lost millions to these reinvented scams, which are prevalent in online shopping, food delivery, and even your messaging apps. Opening with a quick health check on the peso that is on the back of the softer than expected remittance jump here. You can see us weakening back to 48 levels, and that has been the case since the past couple of weeks, really, after having broken below that level and trading at 47 to the greenback for quite some time. Now let's open our index today. It does seem to be pulling back down. We are down by a little, by 0.03%. Still, nevertheless, closing in on that 7,000 level that we were hoping to get back to. And you can see that in the past 3 days, we have been inching our way up there. So still a slide, but not necessarily retreat. And you've got us, of course, yesterday already on a 4-month high. And what we're really gaining yesterday were the restaurateurs. Jollibee, for instance, rose around 3.5%, the highest close since January of 2020. Max's gained as much as 7.6%, and Shakey's jumped by as much as 2.7% to a 6-month high yesterday. Of course, there were a lot of announcements in terms of the GCQ easing, at least in Metro Manila, wherein indoor dining can go above 30% now. Regina Caps Luis Limlingan said investors were in a buying spree, anticipating, apart from this domestic loosening of curbs, the U.S. Fed's decision to loosen monetary policies. Now, I just want to take a very quick peek at one specific stock this morning, Megaworld. That is up by 0.3% to 3 pesos and 29 centavos. It is almost official well, the board has approved sponsorship of a unit's application to list its shares as a REIT, or a real estate investment trust. Now, here to chat about all of these developments and more, we have with us first Metro Investments, Tina Ulang. Good morning, ma'am. Tina, welcome back.
Hi, good morning. Good morning. Good
Ma'am,
morning, Danny.
good morning, ma'am. Let's take a step back and look at our general index and how we are inching our way back to 7,000 levels on the back of some new developments here. Of course, GCQ, at least in Metro Manila, still extended, but less restrictions, or no restrictions, if you can say that. But on the other hand, you've got remittances still softer, much softer than what economists have expected. Is there a connection between the movement of the bourse, at least, or of the index, and the economic data that's really coming out?
Of course, there's always a connection. The index is always reflecting what's happening in the macro front. But the now what is noticeable is really the shift in the play in the market, and it seems that investors are moving into the reopening place, the cyclicals, because the reopening is happening slowly. We are loosening up the restriction, and that's really because of the pandemic. And the healthcare facilities utilization has improved, like coming down from a high of 70% down to 50% and moving lower. And the infection rate has also been managed well. It has come down from a high of like 14,000, 13,000 on a daily basis to just 6,000, 7,000. So everything is tied to the pandemic, and the macro it responds to the pandemic. And now that we have the OFW remittances improving because the global economic recovery is underway, especially in the US, where we get a big chunk of our, about 40% of our remittances, the consumption is benefiting, the pent-up demand, and the households are on the move to spend. And of course, this is not to say that unemployment has dramatically improved. Actually, it's still on the high side, but there is this support coming from the remittances from abroad, and that's about 16%, 17% of the Philippine GDP, and that is supporting the play, the rotation into the growth stock cyclical from previously those that were the core holdings because of the lockdown, such as your utilities, your power companies, your essentials. Now it's more of the financials. The banks are going to benefit from the reopening of the economy in terms of the NPLs. The companies are going to be the borrowers will be able to repay their loan eventually, and that is going to translate to better NPL ratios coming from a high of like predicted to be peaking at 6%. So it's not only the restaurants that are benefiting, but practically the sectors that are going to be on the reopening side of the economy.
Okay, thank you, ma'am. According to NEDA Secretary Carl Chua, this lockdown, if you can call it a lockdown, is very different from the one of last year in terms of the impact on the economy. Can you say this with confidence, especially since the first quarter of the year still saw us in contraction mode? Will the second quarter be any better, and will we never return to the levels that we saw in 2020?
Well, in the past, since 1999, the Philippine economy has not registered a single quarter of contraction. We've had 80 quarters consecutive growth in our GDP, and it was only last year when we suffered in the first quarter negative 0.7%, and then we sharply dropped to about 17%, and then we recover gradually in the third quarter, 8.11% negative, and then the fourth quarter, negative 8.3. So in the first quarter, we did 4.3, negative 4.3. So it shows the progression. Now we're coming out of the trough. We are climbing out of the pit slowly, hopefully, surely, because of the vaccination drive is underway, and then the loosening up of the restrictions is going to open up various industries, and hopefully activity will be there. People will be able to move more freely, but of course there could be challenges, and one of that would be the inability to handle a third surge, a second surge. We don't know, the variants could come down because this is what happened in the first quarter. We were very optimistic. The GCQ is underway. We're reopening, and then suddenly you have this variant coming from abroad, and we have the huge spike to 14,000 on a daily case of infection. Now we don't know if this is going to happen. What is our preparation? That's why it's been a very slow reopening, and we are government's very careful, and hopefully the healthcare facilities will be there. But you have a buffer and an offset in terms of the vaccination, which is ongoing. That's why it has to be speed up, and we need to achieve the herd immunity. Now, what is different between now and then is that the businesses are on on uh, on near business as usual. Near it's
Okay.
moving there, but in the previous year we had total lockdown. That's why we suffered unemployment of like 17%, contraction in GDP of 17%. Now we're not seeing those numbers. Unemployment is 7% and then 8.7% in the latest reading. So there's been an easing of the very sharp contraction in the economy.
Okay, so worst is over. Ma'am, you mentioned earlier on that cyclicals will now be favored. Can you say the same for the financials, especially since the loan growth has still not picked up there and the non-performing loans are still continuing to increase? Can you say that for these banks, the worst is already over in terms of non-performing loans, or is there going to be a lag effect pa rin of the closures in businesses weighing in into 2021?
Mhm. Of course, the key worry is that the prolonged lockdown might cause a scarring in the economy, such that it's going to be a prolonged recovery. But we've got stimulus in place. Governor Jokno has been very dovish in his communication. He's saying that inflation is going to be 3.9 this year, prediction coming from an earlier higher 4.2, and that is a big good news because that is going to make it easier for our private consumption to recover and for margins of businesses to at least remain stable and enable the economy to climb out of the trough where we are in. And aside from inflation, government also, the BSP is on an accommodative stance, which means the financing condition continues to be favorable. Long-term interest rates, short-term interest rates have come down, have eased a bit, coming from their peak a few weeks ago. And we are seeing a downward move. Even in the U.S., the U.S. 10-year rate is moving down despite the worry about the inflation and the Fed tapering. So we still have that good liquidity in the system, and that is providing support for the economy. Moving forward, we will have fiscal stimulus, Bayanihan 3, and then the government budget this year for 4.7 trillion, increase to 4.7 trillion. Next year, we'll have 4.5 almost 5 trillion. And the good news is the Mandanas ruling, which is going to transfer most of the government resources, the government money, into the municipalities, into the LGUs. And what does that do? It puts the resources at the disposal of the government, the local governments that are at the very forefront of this COVID pandemic. So they can address the issues about infrastructure need, about healthcare facilities, about ayuda. This is a big change as far as where the resources should be. Although many people are skeptical about this ruling, there may be slippages in the spending, but I see this as a very good development because the money is now at the disposal of the LGUs. There may not be in a very good position to spend. There could be slippages in the spending, and that could not translate to your strong growth in GDP. But we are learning. They are on the learning curve, and I think it's time that the resources should be where the problems are, which is at the
Okay.
grassroots.
Okay, so decentralizing the funding and for speedier and more efficient
And
disbursement
yeah,
of fiscal
Danny, I
stimulus.
forgot. For
Go
the
ahead, ma'am.
bank, we are on the eve of a recovery as far as the credit cycle is concerned. In the third
Okay,
quarter, the SB governor was saying that she's expecting banks to be to have more appetite in lending because
correct.
the recovery is underway and the vaccination is underway. Hopefully, we're able to build uh, near herd immunity and near normal situation. And so there is an expected recovery in the lending. So the leverage cycle, credit cycle is going to pick up, and that's going to help our government. It's not only the BSP that's going to provide the liquidity, but the banks are going to participate in a meaningful way in the recovery that is underway. So that's good news for the banks. And I think the top three banks are going to be in forefront to resume lending to
Okay.
those very much in need of money. the corporate
Ma'am,
sector,
speaking of
MSP.
lending and sectors that need help, let's focus on one sector, one stock in particular, PAL, which is supposed to have filed for Chapter 11 in the US in May. It might happen on June. And this, according to their former CEO, they will be able to return to pre-pandemic operations in 2 to 3 years. If this pushes through, they're asking to raise $505 million in debt, basically. Tell us, is this something that banks would be, happy to do? And also, does PAL have enough, especially with the losses, not even during pandemic, but even prior to it, will they be able to finance this and get back on their feet in 2 to 3 years? Is this too ambitious for you, or is this something feasible?
I think this is born out of need, and the main problem of the aviation industry is really cash flow. So for them to take advantage of the reopening of the travel and aviation industry, they should be able to fly. They should have the liquidity. They should have the working capital to enable themselves to operate and to be able to rise above the debt that they have incurred and be able to repay them. But of course, there should be a reprieve as far as the interest payments and the principal payments repayment are concerned. And the banks, I think, are willing to give them some room so that they are able to effect a turnaround over how many years. And I think that is what is important. And we
Mm-hmm.
cannot do anything about the pandemic. It has hit everything. And but for the economy to really gain ground and recover, we need the aviation sector. I think the financial industry, the banks are cognizant of the fact that this is an important leg of the economy. Logistics, you have your transportation, travel, tourism. So we are dependent also on tourism, 7%, 8% of the economy. So to help the airline is to help the economy. So
Okay.
this is bayanihan in action. It's give and take, and it's
Mm.
being cognizant of the difficulties of the times and being very practical in order to effect a turnaround, benefiting all the stakeholders, the owners of PAL, and so the creditors as well.
Okay, so creditors cognizant of these risks, but nevertheless, hopefully willing to help the most ailing industries. Thank you so much for those insights. Tina Ulang offers Metro Investments. Checking in on other headlines, we're keeping our eyes on the country's economic managers are backing a proposal to reform the pension system for the military and police to prevent its collapse and ease fiscal burden. An interagency body composed of the DOF, BSP, and DBM and NEDA said the automatic indexation of pensions or the aligning of a retiree's benefits to wage increases for active workers is unsustainable. Case in point, the DBCC said salaries of uniformed personnel increased at an average of almost 20% from 2008 to 2019. Now, despite the increase, soldiers and policemen were not subject to the mandatory contributions deducted from the monthly salaries of government employees. GSIS says the government would need to allot 9.6 trillion pesos just to keep this pension system afloat without reforms. In a statement, the Development Budget Coordination Committee said reforms would ensure a better framework for the pension system while easing the pressure on state funds amid the pandemic. Now, the SEC has revoked the license of R&L Investments due to fraud. It has also imposed a 25 million peso penalty on the brokerage, its key personnel, and the owner of the account used to steal the shares of its clients. R&L Investments trading floor assistant and settlement clerk Marlo Moron supposedly stole client shares from the brokerage from 2012 to 2019, which were then transferred into a venture securities account under Julieto Sulapas. Over 1.13 billion R&L Investments client shares were transferred to the account through trades executed by Moron, who was not even a licensed trader. The scheme resulted in a loss of 700 million pesos worth of client shares and a deterioration of the brokerage firm to the extent that it can no longer meet the demands of its clients for the delivery of securities and payment of sales proceeds. This move comes after one day after a commission announced the cancellation of Venture Securities' license due to its involvement in the collapse of R&L. And that's the first look into the business day. Today is June 16, 2021. Catch Business World Live for the market closes at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.